Bam, baby, we live. People be watching the recordings like, what's up with this dude? So what's up, y'all? You know the drill. It's Friday night. I feel like I just talked, but it's because we just had the guest speaker yesterday when I was on Zoom for that. And then we have another guest speaker right after this. So we're going to have two recordings today. So what I'm going to do, as much as y'all know I love charts, you go all up and down my channel, you see charts and charts and charts. I'm going to teach y'all two different ways that you could swing trade without charts. All right. And I'm going to say this, so I'm preface this with this. One, I think price is very important. Understanding price action, understanding how to read price action, breaking price action down, and then, making moves off of that. I will say that. Secondly, I don't think that these things should be done on their own. However, I have done them and I have also seen them done without looking at charts and price, and they be done successfully. So it's one of those things that sounds a little off in concept at first, but it works somehow. So I still prefer with everything that I'm doing, whether it's news, whether it's earnings, whether it's upgrades, whatever it is, I always still like to look at the chart. And then once I can get, a chart confirmation for myself, then I'm like, okay, cool. I'm fooling with the chart and it has this news behind it or whatever the case is. But it's kind of like that same notion with the news. So we're going to roll into it again. Two things, two different ways that I have and I've seen others trade without charts. I'll go ahead and put y'all on. So first one is using options volume, unusual options volume. All right. And all I'm gonna do is I'm gonna actually show y'all how I was shown it and how this dude did it. So when I started trading. So like y'all, a lot of y'all know this is my 10th year in the market. All right. Started out long-term focused, thought I created swing trading, turned out I didn't. But then I was focused on swing trading, went into options trading, options swing trading. And then now this year is my first year day trading options. So that's my journey. And my 8th year, I joined the Discord. My first time joining the Discord was my 8th year of trading. I think it was my first year and a half of like being in options trading. And up until that point, I was like, I'm not paying nobody for nothing. Anything I want to learn, I can learn online, all that stuff, right? I joined this Discord, and this guy is running like $1,000 challenge, and he just, he did 1,000 to 3,000 that month, 1,000 to 4,000 a month before, 1,000 to 2,000. So, okay, he's doing good. And I went through, because I'm very analytical, right? I went through and I read all his posts. The guy who runs the chat, I read all his posts. And the guy was like, he literally doesn't use charts, right? And he said, if he does, which is rare, he just looks at the stock he's trading to see if it's above or below the 20-day moving average. But he doesn't even do that often. So what he did was, and it sucks because the timing that we're doing this, we can't even see on bar chart. I'm sure there's another website I probably could have found that might have had it for today. But what he would do is pull up the unusual stock options activity for the day. And since we can't get a full visual here, I would say, on Monday when the market's open, come back to the site. This is bar chart. Come back to the site and look at it. But I'm gonna show y'all from this screen right here. So what he would do is this. He would open up bar chart around, last hour or so into market, right? And he would come through, sort everything out by name. I feel like I'm just putting his business out there, but he told us that though. But he would come through, he would sort it all by symbol, right? So he sorted by symbol, and you would start to see them line up. So see if I can find one where it looks a little better, because I want y'all to get like a better visual of how it normally looks. So let's see if we can get, this should do it. And even do it like that. So anyway, he come through sorted by name, and it will list all these options trades, strikes and things of that nature, based on the volume compared to the open interest. And so what you will look for, what you can see on this other screen, is stocks or contracts really that have a open interest of, sorry, wrong screen, volume to open interest of 3, right? So 3 times the volume, or 3 times volume over open interest, more volume to open interest, right? So like this is 2.25, this is 1.86. So we'll look for it to be 3 times the volume compared to the open interest, right? And so what he was saying is, that way you're seeing a lot more contracts being open, a lot more positions being taken, which is most likely going to be buys. Not always guaranteed that this volume is buying, but it's more likely going to be buying than selling on the call side too, right? So you're looking for call side. A lot of times puts could be hedges, right? So he specifically stuck to trading calls majority of the time. But I sat there and I studied this guy, and he literally was popping out 80% win rates, doubling accounts without charts, right? All off of breaking down the options. And so here's why I think it works. In my mind, when I look at something like this, and you could pull it up and you could see, hey, at the beginning of today, there was 60 contracts open, right? Under this stock, right? And then today, we come here, for example, so this had 0 open interest. So there weren't any current open contracts on this stock. It had 33,347 in call value, right? Why? So total volume 62. Well, where is all this volume coming from? And so just looking at things like that, comparing the call and put volume, basically it was like, okay, some money's being pumped into these contracts, and the funds, the institutions, whoever it is anticipating something moving. Otherwise, there wouldn't be all this money getting put in these contracts. So there's different ways you can break it down where you're comparing it to the average volume of the stock, right? How many shares are traded, how many contracts were traded. And now you see, oh, normally this amount of contracts are traded, or this amount of shares are traded. And there's this huge gap between what's being traded and what just got put on these contracts, right? So I think the simple way to think about it, and there's tons of different ways you can look at this stuff, like usual whales, flow algo, cheddar flow, TradeIdix has flow, right? There's flow stuff getting put in the Discord with options flow. But it's just looking at those big buys, looking at where the big money is flowing, and basically just following the money, right? So again, all he would do is come to bar chart. And again, because of the time right now, it's 9 o'clock, so we don't even have full access. He would come to bar chart, sort it out, and just look for there to be continuous call buying under one ticker where you can find the volume to be 3 or higher compared to the open interest. All right, and so then he would go and look. He would go and look at the chart, maybe see if it's in the uptrend or not. But most of the time, it just was straight through. And so the thing is, why I'm saying that is because he did mention it before, but I've done it where I just didn't. Like I did a test account, and that's what I do a lot of times when people are like talking about different strategies. I'll do a test account. Let me see if this works. Let me see if I can make this work, because things are going to work for certain people, but not always work for me, right? Same thing. Me trading on the 1 minute might work for me, might not work for you. Me trading on an hourly chart because I'm trading a certain way, you might be like, what? All right, but it works for me. Somehow Jordan's winning, somehow Jordan's making money, right? And so things might work for you differently. So what I would do is, after I tried that out and it did work, I saw that it worked a lot easier in the bull market, of course, because things were already going up, right? What I would do is I would still go check the chart. And that's what that's why I said at the very beginning of this, talk about 2 different ways to swing trade without using charts, but I still would, because of how I trade. And I like to have more certainty in what I'm doing, because I don't like losing. I would still check the charts, right? So again, bar chart, you can look at flow, cheddar flow, flow algo. There's tons of different places, but the main concept was looking for repeat call volume or repeat call contracts coming through, or call orders coming through, volume being 3 times that of the open interest, and then having maybe 1 or 2 weeks of expiration, and he would swing that, right? And as far as taking profit, he would literally just take profit when it was there, right? So that's one way. The other way, and this is what I started doing, I would look at the open interest. So I got in, okay, now I see, the volume today was 50,000 on these contracts, right? So heavy volume on these contracts out the blue. Next day, there might be 30,000 open interest. Okay, so I know there's 30,000 contracts being held, right? Raymond said, I'm going fast. Tremel Horton said, those are super healthy. Okay, I'm gonna slow down for you. So what I would do is, and I'll go through, I'll go back through the criteria, right? So what we're looking for, come to bar chart around 2 p.m. Eastern, come to the options, unusual options activity, sort it by alphabetical order, and then look, and you'll start to see, I wish I had like a screenshot to show, maybe I'll send one Monday, but you'll start to see where it might say, Goldman Sachs, 296 price, 297 strike calls, 298 calls, 299 calls, or whatever the case is. I doubt they go up by every dollar at that price. But when you see that, it's like, yo, it's a bunch of calls being bought and they're all around this strike. Look at the expiration. Oh, and they're around the same expiration. And you see that the volume is greatly exceeding that open interest. That's something that he traded off of. And like I said, I tried it out for myself and it worked. And it was weird because it was different, right? So I'll say that too. It was weird because it was just different, right? And so I was also used to the charts. All right, D, what's up, D? D says, what is the definition or criteria of unusual options activity? I believe they have a definition right here. I'm gonna see what they say, and then I'll see if I put in different words. So this says unusual stock options activity identifies options contracts that are trading at a higher volume relative to the contract's open interest. It can provide insight on what smart money is doing with large volume orders, signaling new positions, and potentially a big move, right? And so my way of thinking about it was kind of the same way, is just looking at that comparison of volume to open interest. And again, you can compare it to how many contracts are normally traded, how many shares are normally traded on this company. And if you notice something out the ordinary, like Nike, especially if you start watching flow and you're like, wow, Nike never has $2 million of calls come through. Like $2 million of calls being bought on Tesla during the day is normal. That is normal. But Nike having 2 million in calls come through, it's not normal. So I think that's what, with me, when it comes to unusual, D, to your question, that's something that I kind of take in mind as well, is, the frequency that would happen. SPY, having a $2 million order on SPY isn't unusual. Regardless of the volume to open interest comparison, I wouldn't consider it unusual personally. But again, something like Coca-Cola having 2 million come through, that's a different story, right? Because that's not normal for that. So unusual for the options, but also unusual for the company. What other questions do we have about what I just went through? Kind of tell us the strategy one more time slower, for sure. All right. So again, what you would do is come through to barchart.com. All right. Bar chart, come to unusual options activity. So you hit options. All right. Come to unusual options activity. Then under options, then he would come down. And again, this isn't something that I put together. This is something that I saw somebody else do, and wanted to just share because I tried it out and it worked. But it was weird because, again, it was something different. But then he was just sorted by symbol. I don't know what he was sorted by symbol, and then he would look for it to be kind of lined up. And so you'll see, for example, if you saw COP calls getting repeated, right? Calls, and it could be different strikes. It could be different strikes It could be different expirations. But then what he would do when I asked, how do you choose? What he would do is, of course, it has to meet the So the qualification for it for him was 3 times the volume compared to open interest, right? But what he said is he would just take whatever had the highest volume. I was okay. Now that makes sense to me. Let's see what else. Tracy said, "How do you find what is normal for the ticker?" That's something I used to know, and since I stopped doing this, there's one I don't recall. And I want to say I used to look at the average volume for the stock and then compared that to the contracts and the shares tied to the contracts. But I don't quite remember, so that's something I'm gonna follow up with you on. When you say 3 times open interest versus volume, oh, how would you follow what they're doing? So that would be you looking at the open interest. Again, this was somebody else's strategy that I took on and started trying to mess around with. Um, but you could look at the open interest and see as the open interest decline. The guy I learned this from, though, he took profits when they was there, right? So it might be 20% the next day he took it. Sometimes it will keep going. A lot of times I saw this work with earnings too. When you say open interest, 3 times open interest versus volume, would an example be volume of 10,000, open interest of 30,000? No, the other way around. So if the open interest was 10,000, volume was 30,000. Volume over open interest is over 3 on the left. It says call, which make a call as well. Yeah, so trading in the same direction as what you're seeing coming up, right? So if you're seeing a bunch of calls, and I forgot to add that. So that was one of the keys was if it had any put unusual options flow show up, if it had any put options show up, he wouldn't take it, right? He would only do it on stocks. So I think that's also plays to the fact that ETFs usually have a lot more premium like SPY and Qs. They're going to have big orders across the board. But focusing in on individual, individual equities was a lot different. But yeah, looking for, like I said, Coca-Cola, if it had, forgive my alphabetical order, if it had Kroger, no, Cola, then Kroger was under that whenever O and R come in there. But if it was just a Coca-Cola call, no puts, and then Kroger started, right? And Kroger might have calls and puts, and Coca-Cola would be something to watch, especially if there was that high volume coming in versus the open interest. Is there a way to discern if the repeat call volume is people selling calls to collect premium, hoping the contract's power worthless? So no, I haven't been able to determine a way for that, and I think that's just part of the nature of, I guess, what comes with the game. And there might be a way to discern between if it's selling calls versus buying, but I haven't just exactly figured out that, so I'm not exactly sure. I think most of the time, though, you see 2 million come through, and premiums. I don't know. People might be selling $2 million worth of premium, in one large order. I think more often than not is probably buying, but that's just my opinion. Do you need the paid version to see this, or can it be used for free? This is the free version. You see these, saw them ads popping up, and this is the free version. Question about my outlook of the market. JP Morgan says SP 500 rebound to 4. I don't see why. I saw that report by JP Morgan that came out today or yesterday saying they think SPY is going to make new highs by the end of the year. I don't know why they said that. I don't see. I don't see it. I don't get it. And a lot of times you go look at the different articles that banks put out and these institutions put out, it'll flip flop all the time. They were all saying Bitcoin was horrible. Then they started saying they were buying Bitcoin. So with the news, it's a lot of flip flopping a lot of times. And because realistically, if I put out an article that says the stock market is going to tank, and I put out an article that says the stock market is going to boom, we know the market's volatile. So one of those articles is going to be right. And I'll be like, yeah, I was right. Right. And that's the one they're going to keep pushing and, showing and all of that. So Be careful with the articles. Use Tradeitics, um, live options flow, and have blindly entered trades based off of $1 million premiums above ask with short expiration have been successful as well without doing research. Yeah, bro. Like, I've done that before too. I don't do a lot of it anymore. Um, but yeah, like I used to sit there and I would just look at it and I would see, what's coming in, kind of like that, above ask, high premium, 1 million plus. I think I started doing like $900,000 plus premium above ask. Um, I think above asks might have been one of the ways to discern buyers as well. Uh, and that seemed to work as well. How do you determine the timing for your swing strike price with this strategy? So the strike price would be the whatever the strike and expiration are with the highest volume. Well, still has the 3 times volume compared to open interest. When it comes to the timing for that, that was another thing that, like I said, from the guy who was doing this, he would enter towards the end of the day within the last hour or so. And from what I've experienced with swings, just like the upstart swing I just had, if we had waited to the end of the day, probably would have caught it for, well, I exited at 205%. But we probably would have had it for another 230, or not another 230, but 230 plus, because I closed down end of day minus 20, you know? So a lot of times swings entering at the end of the day usually gives you a better position from what I've seen. If we have more calls overall, I like that y'all got so many questions today. If we have more calls overall, does it mean the market would trend upwards? Not all the time. So that's the thing about it is you see the flow, but I don't think that's necessarily going to mean that. And somebody says you need the paid version of bar chart to see something. Yeah, so you'll see the flow, but I don't think that necessarily means, because it's always going to be a lot of money. You can look at call and put ratios. I've looked at put to call ratios and overall the total market. At extreme levels, I've seen a lot of reversals, right? So when it's like heavy on the call side, I've seen it start to flip. When it's heavy on the put side, I've seen it start to flip. So you could, but I wouldn't use that as a clear indication as far as the market. Stop loss. Do you hold the swing even if it goes like 50% down? Other thing with this strategy. So with the strategy, when it came to stop loss, I don't remember what he used as his stop loss. I think I started using a 30%. I started using a 30%, but part of it was taking profit immediately. And a lot of times profit came, the first day, second day. So that's a good question. And I wouldn't hold it 50% down, but you have to look at how much time you have on as well, and then still looking at the open interest. And you're not going to win every trade, right? So don't let it go 100% down. But this would be one of those strategies that has looser stop loss rules. And that's the thing about different strategies is they have different rules, So I absolutely wouldn't have taken a full loss. Maybe 30%, maybe 40%, or start getting a feel for it, use a 30%, start getting a feel for how much drawdown they do. I think when I was using this strategy, I did often go down 20% or so before a flip, if it did go down. But a lot of times they did end up going back up. A lot of times they would go up and run even after I closed. But yeah, this is one of those strategies that doesn't have, as far as I recall, and this was again 20, what was this? This was maybe it was like 2018 or so, 2019, something around 2018, 2019. So I don't even remember that much about how he managed the stop loss, but you could definitely work it. Upstart was fire. Hello, Jordan. I'm an 18-year-old new trader. If you could, would you mind explaining what premiums are and why they're vital? The premiums are going to be how much money is being spent on these. All right. Welcome to the market, Zion. Somebody said proud of you. Yeah. So, sorry, I'm looking at the chat, man. So yeah, premiums is the money spent, right? $2 million, $4 million, the money spent on these contracts. As for expiration date, is it the same as the highest open interest volume or before or after that date? Doesn't matter if the stock goes up until the high volume date, then dumps. I would close it. I think if I'm getting your question correctly, and then I'm gonna move on to the next. The next thing I'm gonna talk about, I know a lot more about. This is somebody else's strategy. This is somebody else's strategy that worked. You got to work it to your own liking. But like Dennis said, taking the concept and looking for $1 million in premium above ask with the short expiration has worked, and that's something I use as well. All right. If you trade Jordan calls, you will know they go down 20 or 30% before going to 100. That's fair. Not all the time, but yeah, they will. That's why I tell people who follow along with me, man, you gotta follow my stop loss. Use your own stop loss. All right, can you go over strike? So I think the easiest way for you to think about strike. Oh, well, there you go. So there's your. I'm always giving like trader definitions and not the actual definition. And I give how I think about stuff and not the actual way stuff is a lot of time. But the definition for a strike is the price at which the holder of an option can buy in the case of a call option or sell in the case of a put the underlying security when the option is exercised. Majority of us typically aren't exercising the options. So when you're trading, think of your strike, unless you're going to be exercising, think of your strike typically as the easiest way. And this isn't exactly how I would say it, but think about it kind of in a sense of by this date, it's your expiration date. By this date, I think the stock will be in a call option, $1 or $2 above this price, right? Because you have to account for the break-even price, which is going to be a premium plus your strike. So you want to make sure that you're factoring that in. But think about your strike as kind of like a loose target, but you always want to shoot under your real target. So if your target is, I think the stock is going to hit 100 by the end of the week, then you would want a strike that might be like 90, 98, 97. That way you'll be able to finish in the money if it does hit that, but you won't be worrying about, breaking even at the end of the day or losing money as much if it does move to your target. All right. And Moody just dropped the options beginner class. So cool. That's again his strategy in a nutshell, the best way I can explain it. But I think, like Dennis said, the way I've used it since then, because I don't use this anymore. But it was useful when I was like trading. I just wanted to pull up something real quick, or I might be, in the middle of somewhere and I can't like pull up all my charts. But being able to see there's a bunch of calls coming in for a certain stock out the blue, that was helpful. Like Dennis said, when I do use it, it's very similar. Where I'm looking at premiums over $1 million, I'm looking calls only, and I'm looking for them to be above ask. Okay, and Moody just dropped the link to beginner's option class. JP3 asks, do I use level 2? I do not. All right, let me get off of that. So let me talk about what I like a lot more, and that's seasonality. That's what I like more. I feel like I can better handle y'all questions about seasonality because I created a trading strategy more aligned with that. All right, so seasonality is very similar to sector rotation, right? But seasonality is just the concept that certain assets have a performance based on, or not based on, but a particular performance recurs depending on the time of the year, right? And if you go look at anything, you can look up what's the best month for Nike, what's the best month for SPY, right? People who've been trading for a while might have heard, with SPY or with the market, was it sell in May and go away or something like that? Because typically the summer months, the market isn't so hot, was the kind of the theory. All right, so it does play in a sector rotation. And sector rotation is just the way that money moves throughout the market during different market cycles. So I want to pull that up, but not get too deep into it. Don't get too complicated with it. But just keep in mind, again, cyclical, just like the economy, cyclical, we go through, just like the bull market, we have bear markets, we have depressions, recessions, where economy is recovering, all of that, right? Certain industries, money is flowing through that. And then even on a monthly level, easy way to think about it is if you have a company that does, jet ski rentals, right? There's a jet ski rental company and they're in a place that has a winter season, then they're most likely going to be, losing money compared to gaining money over the summer season when people are jet skiing. People not jet skiing in the winter, right? So that's the simple way to think about it. The way I like to talk about it as well is, we had to place a bet on when the most people were going to sign up for the local gym, right? Well, if I bet that most people are going to sign up for the gym in January and you bet in June, probably every year I'd be right, because most people are signing up in January, New Year's resolution, things like that. And then they're trying to get ready for their summer body so they're ready in June, right? So that's the same concept. So what I went ahead and did was pulled up top performing stocks in December, right? And I just Googled this. What stocks perform best in December, right? So this is going to show, and I'm not sure what data, this looks like it goes to 2016, right? So this is talking about these stocks, and we're going to look at the actual data for them, right? So UL, never heard of this company, but you could go look it up. I'm going to show y'all how I get down, but you could go look it up. And this is telling us that the past 25 out of 27 years for December, all those years, it's average of 4.6 return, 4.16, right? Average loss those 2 months that it didn't go up was -2. Average gain during the months that it did go up was 4.6. Biggest gain, 13.98. Biggest drop, -4. All right. So taking this into account, if it was December and you were like, dang, I'm busy, I got class, I got work, I got the kids, I got whatever, I don't want to look at charts, but I want to put my money in something. I want to come back at the end of December. I'm going on a month-long cruise, a month-long vacation, whatever, right? I'm going out for December. I'm not looking at anything. I'm not touching my account, but I want money to be there. This would have been a trade that, again, this thing, I think this said this was from 1997 and 2016. I'm not sure if this is the same for these stocks or when this was updated, but the concept is there, right? The data is there. And that's the beauty of this strategy. And utilizing things like this is that it's data-based. That's what I like. It's like you can't argue with data. You can't argue with facts. If the fact of the matter is, if you pull up this stock and look at it December on a monthly chart, you'll see these numbers. I haven't went and checked this, but that's it. So next December, if you're like, man, I don't want to look at charts, or again, in title of this class, simple swing trading without looking at charts, boom, right? And we'll scroll down. Southern Company, SO, 23 years out of 27, 85% win rate. Average December, 3.54, right? So we just got two. Keep in mind, what's the average market return year over year? About 9 to 11%. All right, you're getting a third of that in a month on average, right? On average, right? So that's the concept, right? And you can take these down. Again, I haven't went to look at these, but they put the chart right here. It's kind of like they're daring us to go fact check them. So GNTX, 23 out of 27 years, 85%. Average gain in December is 8%, right? So does that make sense? I'm gonna go ahead and hit that. Put a Y in the chat if that's making sense. The way I explained it, like a jet ski company, the fitness, the gyms, things like that. Amazon, this is one of my ones that I know. Amazon, Apple, Nike, they have December, they shoot up too most of the time, right? And you can clearly identify why that's happening, right? You clearly identify that. Black Friday, Christmas. So people are buying up stuff. Amazon Prime. Amazon usually does good on the day. It's either the day, I think it's the day after Prime Day or the day of. But if you go pull that up, Amazon usually does good around then as well. All right. So we go on UTX, 22 out of 27 years, 81%. December, 3.99%. All right. UNH, 81% win rate over the past 27 years. 4.81%. Striker, 81% win rate, 6.16 average gain, right? So again, hey man, it's December, I want to buy some stuff, but I don't feel like looking at the charts. I don't feel like watching my portfolio, whatever. Market average year over year is about 10 to 11%. You're getting 4% right here on that. So Let's make it Jordanized, right? Some of y'all know about the profit counter. So what I did was I was like, all right, cool. So I understand that these companies go, Charlotte asked if these have the volume. Yep, they put it right here. This is raw data. How you interpret it and what you have to do with it is up to you. That is crazy. All stocks do at least 500,000 in daily volume. And for them to be on this list, need a gain of 3%. Right? So what I did was, and this again, like I told y'all earlier, I'm analytical. I like to get down in the weeds and stuff. So when I see this, I'm like, okay, cool. Unilever, or however you pronounce this company, UL. All right. In fact, I'm gonna go to the one that had 6% for a bigger gain. I like gains. All right, Gentex. So if I know 23 out of the past 27 years, for December, it's had an 8% gain on average. I know that, right? What I want to look at is out of this whole month, where does the bulk of that move come from? Because I'm an options trader. It'd be different if I was just swing trading shares. And this works wonderful swing trading shares. I'm going to show y'all. I actually tested it out. Because I talked about this on my IG. People thought I was capping. People thought I was like, whack. I'm like, bro, don't play me, bro. So I'm going to show y'all that too. But so what I was like, okay, bet. Let me go pull up the chart. And then let me go look at this. And let me see if I pull up December, where does the bulk of that move come? Is that the first 2 weeks of December that it gains 6%? And then the rest of December, it gains 2%? Is that the middle of December, like week 2, week 3? Is that week 3, week 4? Where, week 1 and 2, it might go down 1%, but then week 3 and 4, it shoots up 9%, 10%, right? So that's what I did. Went ahead and I was like, all right, bet. Let me figure this stuff out. Pop, pop, into the profit calendar, baby. So look, what this was me taking the same concept and me being a crazy person and pulling the data for all these stocks in the S&P 500. So when I set this up, I was in college. It was summer. I was in college, and I was working a full-time job as an intern, doing summer school classes, and then still trading. You know what I'm saying? So I would get off of work, pull up the charts, and I would chart for an hour after work. I was working for an hour, doing summer school, coming home, charting. And I'm like, bro, and because I was laying out my levels, like I'll hop on FinViz, do a screener, go trade and view, mark it up, set my alerts and all that to get ready for the next trading day. So I was like, bro, it got to be simpler, right? And so I was like, always researching. And I was like, okay, cool, seasonality. Okay, cool, sector rotation. Okay, cool. So you're telling me like stuff just moves in cycles all the time. Like this is stuff that happens every year. Like every year there's cycles in the market, right? And then on a bigger scale, there's bigger cycles in the market, right? So I'm like, that, bro, just like this, if I see that GNTX goes up 8% on average in December, how about I go look at GNTX and see when does that happen, right? So this is the profit calendar. When I put out a free version, all this wasn't here. All these numbers these actual numbers weren't here. These results weren't here. But I was talking about this concept on IG, and I actually was like putting this together and dropping it off to folks. I'm like, yo, like this is gonna change the game, because instead of me just saying in December, if you buy GNTX, sell at the beginning, or you buy at the beginning, sell at the end, you're gonna average about 8% gain. Now I'm like, yo, forget that. Western Digital, you get your big chunk of gain. Maybe Western Digital does the same thing in December, but you get the big chunk of your gains in 10 days instead of, or 11 days instead of the whole month. All right, let's shrink it down. So I had all this laid out because basically folks was challenging me. Oh, and I'm gonna say this because it really I was passionate about it. They're like, no, if you found this secret thing or you made this, then why would you tell people about it? Why wouldn't you just keep it to yourself? You be a secret millionaire. I'm like, bro, why I can't put people on? So I laid all these dates out, all these dates. This was in 2020. So I went from November 11th of 2020 all the way to November 11th of 2021. laid these all out a year in advance. I just said, watch, and I'm gonna track it. This was a live spreadsheet, right? So I was already calling out, buy NVIDIA on the 21st, sell it on the 17th, right? Buy Adobe on the 18th of March, sell it on the 2nd. Like all that was already dropped to you on November of 2020. I'm telling you what to buy next year, right? And it's because it's based off of these same concepts, right? We understand that these things happen. Again, you can't argue with data. You can't argue with facts. Raw facts is that this stock averages an 8% gain 27 years in a row. Like that's the average. Out of 27 years, that's the average, right? Cool. This stock, Monster, if you get it on the 11th, you got to adjust for weekends and things of that nature. When you get on the 11th, you sell on the 4th, out of past 17 years, you would have 94% win rate with a 10% average profit, right? So that's the profit counter in a nutshell. And so I ran it for a whole year, ran it live, so I could just go ahead and show people like this is legit. It also helped me to like, verify that it was legitimate. Then I did do my own account with it, but this was it, right? Tracked it, 4% average return, 71% win rate. And this was again, all off of stuff in advance. I'm gonna show you, because I already put one out for this month. Some of the lifetime members are on it, some of the other members are on it. So this is all stuff in advance, right? This was no charts, no news, no whatever, nothing. This was me telling you, like, this would be like me telling you today, hey, in 2023, buy Hershey on the 28th of January. Watch you make money, that type of vibe. So what I want to do is actually show y'all, this is the inside look at it. But I want to show, so I get a lot of questions about this, and it's like, oh, it's easy because it was a bull market, right? So I want to show, and I already had one marked up. It was a bearish trade. I don't know what month it was. I don't know what month I had that. July last year. I don't know, but I do have it marked up, so I'm gonna show you. I already ran this class before, a little secret. No, now we'll circle back and get all questions in a minute. All right, so this is Honeywell, right? So these are bearish trades. We're looking at first, so that's what it is. Let me go back to the prop calendar. So that should be on the June bearish calendar, right? Yep, Honeywell. All right, so that's me saying June 1st to the 27th. I was basically saying this thing should drop, and the average drop was 2.8% past 16 years, right? And again, you're not gonna see all this. Already saying September 2022, August 2022, July 2022. It's already just like this, already called out, already there. So this again to the concept of the class, swing trading without no charts. It's already there. You see the concept. Let me show you. So this is me saying that Honeywell's a bearish trade, right? Here's the one from this year, which again was called out in advance, and it resulted in a drop about 8.29% from the start date to the end date, right? We're gonna slide over, so I'm gonna show y'all a couple of them. And we're just gonna look at wins and losses. Some of them are smaller because this one, if we go back, average win was about 2.8%. So average drop was about 2.8%. All right, but there's another one, big drop last year. Oh, that's 2020, sorry. So it went up 2019, that was a loss. It went down in 2018. We just roll over, a little small loss in 2017, so it went down. Would have been a win for you. Down in 2016, down in 2015. I think that's as far as I went when I was, 2014 looked like it was flat. Yep. So we're gonna see, right? And this one was a small one too. So that's the deal. Looking at when we were in this bull market, looking at bearish trades, right? That's the concept, y'all. So, because it's 9:54, we got a guest speaker coming on after me. I'm gonna make sure he's ready. I'm gonna tell you, oh yeah, let me pause the recording. I'm gonna drop y'all a secret little code. So the profit calendar is a separate service. It is on my site. It does have a cost associated with it. I'm gonna pause the recording and throw y'all a little, little wink wink. You know what I'm saying? All right, so let's take a look inside of it. All right, so what I did originally was I just dropped the calendars and I was like, yo, this is dope. Like, folks gonna make so much bread off of this. And then when I started dropping it to folks and like giving it to folks, selling it to folks, whatever, it was like some people got it. People who've been trading for a while were like, oh, bet I can run credit spreads with this. I can do this and that. Other folks were like, what do I do with this, Jordan? I was like, oh, that's right. You don't get it. You don't understand. It's just a bunch of dates and numbers. So then, don't even get me started on the 100% list. So then I came through, put a bunch of videos in here, breaking it down, TA videos, breaking down different patterns, because just like the previous strategy I covered, even with this, I have tested it out myself and traded it blindly and have had success, but I still prefer looking at charts, right? Because again, the more confirmations you can have, the better, right? Why would you not want confirmation? So I still look at charts. I go over looking at charts in this for those who don't know about it. Go through options. Credit spreads work great with this for those who don't know. This isn't like a spreads class. Nate did do a spread class, but you could have a spread set up where this trade, for example, 2017, you could have set up a credit spread where even though it finished flat, you still could have got a 90% plus return, right? So Nate has that. Nate has that. That class is up, but that's gonna be it for me shortly. Y'all can ask more questions in the chat. Again, we have another guest speaker. We had one yesterday. We got one more coming right after me. I'm just sending him a text, make sure he's ready. And he about to, man, like I said, I was taking a walk today and I was like, yep, I'm a trader. I'm not an investor. Because these folks, man, breaking down the rates and all of that is crazy. Bumblebee, you said you got the profit counter and took 2 trades. How'd it go? Thank you, Angela. Yeah, Bumblebee said she took 2 paper trades off the profit counter. It went very well. You used the trailing stop and TOS cheated you. Sounds like it took you out and then it kept going. That's good. Yeah, so that's it, right? 2 strategies again where y'all can swing trade without needing charts, right? Again, I would look at the chart still. I like to look at charts. Price helps a lot. Trend helps a lot. Trading in the direction of the trend, even with the profit calendar. And I showed you that blindly, me throwing random dates, well, not random dates, dates are all dated. Me throwing random picks off of the profit calendar is finished with a 71% win rate. You could still come in here and say, okay, let me pull up. If we pull up June 2022, right? If we pull up June 2022, we can go look at this and say, okay, XBI is a buy from the 13 to the 7.5 with a 4% average profit. And then you can go pull it up. And then you can say, is it in an uptrend or a downtrend? Oh, it's in a downtrend. I'm gonna leave it alone. It's in an uptrend. Okay, maybe it keeps going with trend. Right? That's how I would look at it. That's how I use it. The other way I do it with options trading is I'll wait. All right, so because they'll have an end date, so 7/5 is the end date for this. I would go look at it and I'll say, let me see if it's negative at 7/1, right? Or what date that's close by, so that I can go ahead and get a contract that'll be in profit if this trade does go at least even. Right? Because again, this whole concept is just saying, just like this one, that these stocks finish with this average, right? And it has been a successful trade. It's been a winning trade 23 out of 27 times, right? In that whole month. I took it a step further. I'm like, yo, let me see what dates these are. And then I'm like, okay, well, at least it's gonna go back positive, hopefully, and then I can capture even more premium. Bumblebee said, she took 2 paper trades with the profit calendar. She was up 60% on one and over 100% on the other. And TOS screwed her on her trailing stop loss. All right, so look, that's it for my part of the class. Like I said, y'all don't go nowhere. We got another class rolling right into this, and that was in 2 days. I wish I was looking at that. So I'm gonna end my recording here again for Young Paul.